Is the Fed making a big pivot? No, they're not. A little bit of a pivot. The Fed has basically said that don't want to raise rates until maybe 2024. That's starting to change. They're acknowledging the big uptick in inflation that we've all been seeing. I don't think it goes all the way back to prices at the peak of the pandemic, the economic shutdown. But we'll probably get to prices back to about 2019. They've updated their forecast from about 2.4% to 3.4% inflation this year. And they're saying that, hey, you know what? We'll rein in our bond buying. Fed buys right now $120 billion worth of bonds every month. They buy $80 billion of Treasury securities and $40 billion of mortgage securities to keep pumping money into the economy and to keep long-term rates low. The Fed controls the shortest of short-term rates, but now they control long-term rates. They're going to get out of that business of controlling long-term rates. It's typically the job of investors to control of the overall market. The chairman of the Federal Reserve is Jerome Powell. He said, we continue to monitor the situation. Again, acknowledging that inflation is running even a little hotter than they expected. They still feel that it's transitory. There is something in it for everyone in what the Fed delivered in Chairman Jerome Powell's post-meeting remarks. And he did say, we don't want to create a market event, so we want to give investors as much advance notice as possible. But he said, ultimately, we do plan on taking corrective measures if inflation doesn't cool down sooner than we expect, or if inflation is more persistent than we expect. They're being data dependent, which is a good thing. The Fed's crystal ball, believe it or not, is not going to work any better than yours and mine. And that's what they're doing.